In today's video, I'm going to give you 3 Yieldmax names that I'm buying to increase my performance in the month of October. Yieldmax helps us earn over $450,000 per year in dividends, as you can see below. Our performance and value shows that we're also outperforming the markets with margin, okay? We're living financially free out of our brokerage accounts using Yieldmax, margin, Cornerstone, and Defiance, and we're up 36% year to date. The S&P is up 22, the Nasdaq's up 23, and the Russell's up 10. Even on a down day like today where we're down $12,000, we still are in line with the indexes. We're down 0.89%, whereas if you look above, the Nasdaq's down 1.01%. So even with 400,000 of margin debt, we're still outperforming all of the indexes. Even during the month of August when we had that minor crash in the market, that 15% correction, we're still outperforming all of the indexes with our approach using margin. If you need help doing the same, email me for my e-guides at aikentod48@gmail.com. So I have 3 buys for you all today, okay? And I think you're all going to like them. They're going to help me increase my performance potentially, but even if I'm wrong, we're buying the indexes or we're buying names within the indexes, so we can never be wrong because our dividends will always cash flow us over time, and we're staying indexed, so we live and die with the indexes. That was actually my quote here in this Bloomberg article. I let the dividends replace my 9 to 5, it says here, and I live and die with the results. Again, Bloomberg wrote this article on me recently, and I've gotten a lot of hate off of this article, okay? Vildana, who wrote this article, was great. Then we did the Trillions podcast. Those guys were great, Eric and Joel. But now I've gotten some extra criticism off of the backs of these articles and podcasts. And I made a video responding to that critic, which you can check out anytime. So again, I have 3 names for you all to buy, okay? And the first name that I'm going with is Google, okay? I recommended this name last week, but it still hasn't done much, okay? The Nasdaq's back at the highs, but Google is still not back at the highs. So QQQ, all right? It's back at the highs almost, as you can see there, but GUI is not back at the highs, and GUI is the way we're playing Google, by the way. So GOG, okay? Google is not back at the highs, and GUI is the way that we're playing Google because I don't like stocks that much, okay? Stocks don't pay dividends. They don't pay qualifying income, so I can't get loans out of my account with stocks, okay? I used to have really nice gains with UPro. I tried to get my house. My banker said he wouldn't give it to me. I need dividends or a pay stub because I need qualifying income for a house or a car. Stocks don't act as qualifying income. They're too unpredictable. You need, again, dividends or pay stubs. Plus, when I buy dividend paying stocks, we always win over time. We can't lose as long as we hold long enough, because if you hold a stock that has, let's say, a 10% dividend, then in 10 years you cash flow because 10% times 10 years is a 100% payback. So Google is the first name that we have on the list today, okay? The first Yieldmax buy for you. But beware, Google is one stock, so stay indexed, okay? Yes, Google is on the 200-day moving average, and it's looking very constructive right here. I bought even more of this name recently, and I don't like to get overweight in stocks, but Google is one of the largest companies in the world, and I use YouTube TV personally, and I think Google is going to keep growing all of its services. It's just a juggernaut. So I'm buying Google, but I'm keeping it relatively small. Even though it's one of my largest stock positions, I keep most of my money in the indexes. As you know, Cornerstone is a 5-star fund, so I always tout Cornerstone because I put so much of my money in Cornerstone. It moves upward, left, or right on its chart here on Morningstar, but on E-Trade you can see that it moves sideways to down, okay? So on a 1-year chart, Cornerstone moves upward, left, or right, as you can see there, okay? 1-year chart, it's blowing away everything that I know of at the moment. But on a 10-year chart, Cornerstone goes sideways to down. Factor back in dividends, drips, and rights offerings, and that's how you get this chart here on Morningstar, okay? So remember, we're buying these 3 Yieldmax names today, but stay indexed because stocks can fall unlimited, but indexes fall only 20 to 30% in a given bear market usually. So stay indexed. And when you're buying Cornerstone, remember, play that properly around its rights offerings. If you need help playing Cornerstone, that's in my Volume 4 e-guide. When you buy my e-guide, you get free access to Discord for life, where we alert you of the Cornerstone rights offering announcement. Okay, we have over 1,000 members here in the Discord chat room pursuing the fire lifestyle. We're all on top of this Cornerstone rights offering announcement together because this is the most important thing in my portfolio right now. Cornerstone, not only is it outperforming everything, but it also gives us a chance to really level up our accounts through those rights offerings. Cornerstone also has a 21% dividend that I must state really quickly, and it drips that 21% dividend down at the NAV for 21% gains every month. So CRF, we get a 21% dividend and it drips it down at the NAV, down at the bottom for 21% gains. And CLM, we get a 21% dividend and it drips it down at the NAV for 11% gains every month. So you're just leaving free money on the table if you don't invest in Cornerstone. Please take advantage of this NAV drip, which no other fund has in the world that I know of. Cornerstone is the only index fund that I know of that has a NAV drip feature. And you can level up through the rights offering, but play Cornerstone properly around those rights offerings. So stay indexed, okay? I'm giving you these 3 Yieldmax names. We already covered Google, but stay indexed. I put most of my money in Cornerstone, Defiance, and Roundhill because they're mostly index plays. All right, so Google, one more thing I want to warn you about Google is the maintenance. All right, Google has 30% maintenance, GOOG, which is pretty good. Cornerstone also has 30% maintenance. But Google, okay, GUI, GOOY, has 50% maintenance. All right, this is a real problem when you're trying to live financially free out of your brokerage accounts. If you're trying to live out of your Yieldmax dividends, please don't try to do that because they have 50% maintenance. So that means that it sucks up half of your equity. And then if we have a correction in the market, you're going to be margin called because, again, the maintenance for Google is so high. If you need help understanding maintenance, that's in my Volume 3 e-guide. For every $1 you put in your account, you get $4 of purchasing power. I'm just using a small amount of that over $1 million in purchasing power to get ahead, and then my dividends pay back my leverage in less than 1 year. However, you want to keep low maintenance names on because, again, if you have 50% names across the board, you're only going to have 50% equity left to play with. And then if you get a market dip or if you get dividends from Yieldmax, which they fall by the amount of the dividends, then you're going to really cannibalize your account. So you can only put small amounts in Yieldmax in order to live financially free out of your brokerage account. And you have to concentrate the majority of your money in things that actually grow like Cornerstone, okay? Yieldmax has bad erosion, but Yieldmax still helps you outperform over time. But again, they cannibalize your account in 3 ways. They have high maintenance, they fall on their ex-dividend dates, and in a bear market, you're going to fall by the amount of the stocks in these Yieldmax funds instead of the amount of the indexes. So remember, stocks can fall unlimited, indexes usually fall only 20 to 30% in a given bear market. Okay, next up, I have Tesla for y'all, okay? Tesla is one of my favorite Yieldmax stocks because it has around a 50% dividend. And look at Tesla on the chart, okay? Obviously, we're going to be playing Tesla through Tesla, but look at this Tesla chart. It's right on the 200-day moving average. I got this idea thanks to my members at Discord. Again, Discord is for the rights offering announcement primarily because that's the most important feature of our Discord chat room. But we also have other channels here for your enjoyment. We have a Yieldmax channel, Defiance, Roundhill, you name it. We have a Canadian channel, tax channel. We have it all here at our Discord chat room. And thanks to my members here, I found out about Tesla. All right, I'm always watching my stocks and I'm always looking for ways to gain more performance because, again, Yieldmax falls by the amount of the dividends. So you have to buy these at the opportune times. And Tesla is on the 200-day moving average, similar to GUI, all right, Google. All right, so Google and Tesla both look good. But also remember, Tesla has 50% maintenance, so be aware of that. All right, Tesla, it has 50% maintenance, so be aware of that. So you don't want to put too much money in Tesla. Also, you can hedge Tesla with Crash in case you're interested, all right? So I keep Tesla on. I keep some Tesla on as well to get capital gains exposure, but then I keep Crash on, CRSH, to hedge Tesla in the event of a fall. I also keep put options on at all times to hedge my account. If we have over a 20% correction, then I have put options that will help us make more money than we potentially lost in the event of a 30% crash. If you need help insuring your portfolio with put options like I do, that's in my Volume 5 e-guide. Our put options were up almost 2,000% during the month of August when we had that 15% crash. Imagine if we had a 30% crash. So I can always withstand over 20% corrections in the market, but if we were to get closer to a 30% correction in the market, then my put options would make us more money than we potentially lost. Also, my dividends pay back my margin debt in less than a year, so my leverage goes away so fast, I'm never worried about margin calls. Plus, as you know, I keep low maintenance names on and I stay indexed like with Cornerstone, so that really helps me withstand margin calls. Even during the 2022 bear market, I never got close to a margin call and we outperformed the market that year. Okay, last but not least, we have gold, okay, GDX. GDX is not a stock, it's a group of miners, and on a 1-year chart, you can see it's bouncing off the 50-day moving average here, or the blue line. So this looks like a healthy uptrend. We're getting a series of higher highs and higher lows here. And metals are starting to break out along with China, bonds, and other commodities plays because when we got the rate cut, that helped everything that was inflation related. Okay, so GDX, gold, Bitcoin, it's all starting to move higher, and I like the diversification of GDX because it holds many other miners within its ETF. So I like the safety here of GDX. It also acts as somewhat of a hedge on a down day because today the market was down and gold was up. But also be aware of the maintenance for GDXY. It is 50%, so that will suck up 50% of your equity. If you need help understanding maintenance, once again, that's in my Volume 3 e-guide. I also sell options. So these put options that I sell help me lower my margin by 50 grand. They lowered my volatility and they lowered my risk because they lowered my cost basis. If you need help selling options like I do to lower margin and lower your risk, that's in my Volume 6 e-guide. So GDX, I sell options on HEQ to get a little bit more performance out of our metals plays. And then I'm buying GDXY tomorrow because GDXY has a dividend, GDX doesn't. So even though GDX is diversified, and I like the idea of having metals in your portfolio to act as nice diversification, I really like GDXY because it has a dividend. I like anything with a dividend, anything with over a 10% dividend. And if it's indexed and helps us get more diversification with our portfolio, then why not buy more of that? But keep metals small because they're underrepresented in the indexes. Energy is small in the indexes and metals are small in the indexes, so please keep that in mind. Alright, so if you need more help living financially free out of your brokerage account, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, you get free access to Discord for life, where we alert you of the Cornerstone rights offering announcement, and you get my phone number for life. Call me anytime you want to discuss how I'm getting this outperformance of being up over 36% for the year, and of course I'm here for whatever other questions you may have. Alright, if you like my video, please click like or subscribe, and I'll talk to you soon, everyone. Thanks.